Let's get in our technical experts on board because it's good going for the markets at large too. Hemant Kapadia as well as Manav Chopra. Need no introduction. Both gentlemen join us on the show. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Tempted to ask about CMI, but we'll ask about the bigger news first, and that's the markets. Hemant, let's start off. Well, you were bullish. It's turned out well so far from 10,700 or 25,400 on the Nifty Bank. What do we do here on?
Very good afternoon, Neeraj. Thank you for having me. I think 10,702 to 10,736 was what we spoke about, which I was expecting. That was a gap. We went to 10,720 in spot, Neeraj, today, so we've come there. Frankly speaking, everything is fine. There is market breadth across the board. My only fear, if any, is we've seen, okay, we'll have to wait for the end of the day, Neeraj. I think probably Navneet will agree with me. We've seen significant open interest addition. We started the series with 2 crore 21, 2 crore 22 and 21 lakhs for the Nifty, and now we've gone to 237 and 25 for the Nifty approx. So if you're going to add so much of open interest after 650 points on the upside and we're up to the gap, I am not sure how to look at this from an analytical point of view. Individually stocks, a lot of them are doing good. No, there isn't a problem. We posted a 2-month high, high tops, high bottoms, except this open interest addition at this level, which makes me slightly uncomfy. Things are okay. Neeraj.
But your call on writing the 10,300 put of May seems to be working.
Yes, Neeraj, but yes, Navneet, I have a feeling now maybe one can, book profits because we've come to this bearish gap, Navneet. We've spoken about it multiple times. Right. So it's not at the end of the world, but we've come there. So, I mean, I'm not sure. A small cool-off went, one could not participate. And now, once again, like I said, the open interest addition, we'll have to wait at the end. No need. That's my concern.
Let's see if there is any sort of unwinding which takes place towards the end. But, Manav, are you looking to buy Nifty at these levels?
See, at the current levels, one has to also keep in mind the risk-reward ratio. What I see is, 10,550 and 600 will be the positional support levels for the markets going forward. The only thing is that, the markets have seen a sustained rally without any brief correction. So, keeping that in mind, one has to have a positional support in mind. So, as long as we trade above 10,550, 600 levels, I think things are still fine. There could be some sort of a short-term pause, but eventually, we can anticipate this move to extend towards the levels of 10,800 and even 10,900, which is quite likely. Keeping that in mind, I think the only trigger that could take the markets higher is the bank Nifty, and looking at the breakout that we have seeing in the bank Nifty today specifically, I think a close above 25,350, 25,400 on the weekly basis, I think it would open further gates of another 500 to 800 points rally on the bank index, and most of the PSU stocks which are in the deep oversold zone, are bouncing sharply, and specifically SBI is forming a double bottom pattern. So I sense that at least for the near term perspective, the underperforming index would give some sort of a shift or a throttle for the indices going forward. So it's all going to be a very stock specific and sector specific allocation which is required, but overall, yes, maintain bullish bias. Nevertheless, it's also a good level to book some partial profits, but eventually I think 10,800 and 900 are the levels to look out for.
Wow. Let's talk about specific stocks. Manav, your strategies for the day?
Yes, my first buy call is on Tata Chemicals. The stock, after a brief correction from its recent high, has witnessed a breakout on the daily charts, and the volumes are also confirming the same. Overall, the trend for Tata Chemicals has been quite bullish. It has tested its long-term averages, and eventually we expect the stock to even exceed its recent swing high. So it's a buy with a stop of 725 for an upside target of 770. My other pick is buy on Minta Corp. Basically, the stock is consolidating near its long-term averages, and few days back it witnessed a very sharp rally. So after that sharp rally, a short-term consolidation. Looking at the overall formation, we are expecting this to break out on the upside. So at the current levels, it has a very strong support at 190. So the risk-reward ratio is very much in favor. Maintain a buy into this with a stop of 190, and we expect an upside target of 215.
Oh, technical calls now coming in on Minda Corp, which has had a great week. 215 is the target from Manav. Hemant, individual stock trading strategies?
I think suddenly everything looks pretty Hunky dory, absolutely. I'll start with Tata Motors. Navneet. We've come down to 325, haven't closed below it. Oversold, positive divergences by some of the mechanical indicators. Crossover buys just appearing. The early, 2 early, 3 early charts have turned, so one gets the feeling that Tata Motors can be a counter buy. 333 entry, stop loss 329, target 341. Second stock which looks promising, it hasn't delivered earlier. Hopefully this time around it does that. Navneet, Sun Pharma, we've been in this range between 490 and 525, 530 for almost 6 weeks now. The expiry is done. There was an open interest, significant call writing at 520 in the last settlement, Navneet. Now that's gone. So one gets the feeling it's on the cusp of a breakout. For formality, we need a close up of 525. So, but yeah, buy Sun Pharma. The stop loss of short target, entry at 520, stop loss 515, target 530, a couple of days.
Oh, Neeraj, MRF has crossed the 80,000 rupee mark in today's trading session. It's trading with gains of 5%. I'm sure this wouldn't interest a couple of the retail investors because
you can't buy it.
No, not that. I think the liquidity, because of the kind of price, they really need a stock split, I guess. But it's gone up on good volumes. Actually, the volumes are higher than what one had seen in yesterday's session. I don't know what has triggered this move, but MRF is trading almost with gains of 5% above the mark of 80,000. It's also all-time high levels for this one.
Yeah, well, big moves on MRF, SRF, anything else ending with RF. Let's see. But yeah, good going really for a clutch of these names. Anyways, let's get in Anand Tandon with his thoughts as well. He's market expert, joins us right now on the show. Anand, good having you. Thanks so much for joining in. Seems like markets are buying not just the good results, but the bad results too. It took Axis a bad number and some positive guidance to clock in what Yes Bank did in trade yesterday after some very good numbers.
Well, yes, banks are a different kettle of fish altogether, Neeraj, because people buy banks when they are doing badly, and they buy banks when they're doing well, because it's supposed to reflect the market, the economy. So if it does badly, one argues that economy will recover, and when it does well, then it's already doing well. So you can't really take a cue on the rest of the market, but clearly the market is in a bullish mood, and now that the near-term technical resistance that the chartists have been warning about has been taken out, I wouldn't be very surprised if you continue to get a rally from here on as well. But that said, the valuation comfort that one had kind of developed after the first 10% fall in the beginning of the year is now more or less gone. You're back to where it was. And, I don't think that the estimates for the next year are going to hold out yet again. So you would again begin to see a cycle which is downwards in terms of the earnings. It would be perhaps a good time to start taking some money off if you've been riding this bull run.
Okay, take some money off the table is what Anand is suggesting. Pull up PC Jewelers. Last 3 sessions have been really painful for this one. It's down 12% right now, 14% actually, almost at day's low. Pull up Indigo as well. It's at 1420, and that's seen a cut of almost 5%, I guess. Indigo too seems to be almost at a day's low level. So Indigo is also seeing some bit of pressure for this one. I think the financial results, they come out on 2nd of May. So ahead of numbers, which is lined up next week, there seems to be some pressure for Interglobe Aviation. But Anand, if you had a chance to look at Maruti numbers, what did you make of it? Good top line growth, which was driven by volume growth of almost 11%, but some cost pressures felt, which dented the margins this time around.
Well, to be frank, I haven't looked at it in detail, but there was no doubt that the top line would be great. They've been reporting numbers month on month. The expectation was that the margins would be a little better actually, because the portfolio had shifted to the higher end cars. But broadly, again, there is very little valuation comfort in that. That said, the company continues to deliver sterling top line growth, and the volumes continue to remain market beating by very far. So from a portfolio perspective, for someone looking to track the index or do marginally better, certainly it would be something that you want to hold on to. But if you're looking to do great outperformance from here, I doubt very much you'll get it.
Interesting. Marti's come off quite a bit from where it was, though it's been trading at these 1.4, 1.5% loss now for a while. Anand, rubber prices may be doing what they are doing, but crude prices certainly are a bit of an uptick. I don't know if all of this gets negated in terms of raw material costs for rubber companies, but when we spoke to car companies, they seem to be suggesting that tire costs and tire prices have moved up. What's your sense? I mean, I'm using MRF's price move today as a cue to talk about the tire stocks.
Well, more than anything else, I think tire companies benefited when the government decided to put anti-dumping duty on the Chinese imports. That pretty much stopped most of the imports that would have happened from that part of the world. And that really relieved the pressure in terms of the domestic market. The domestic market keeps on flattering to deceive. One has always been arguing that given the kind of volume growth that one has seen in the auto sector, there should be a time when the tire companies should do well, and perhaps now is the time. So many of the companies which have done well from benefited from the anti-dumping duty will actually do quite well, perhaps in terms of performance as well. Besides MRF, if you look at Apollo, for example, they have also been doing quite well. And some of the companies like JK Tires, etc., have also joined the party. So it seems to be across the board for the sector as a whole.
Okay, clearly the tire companies have been doing pretty well, but just from the broader market space, Atul Limited, that's also seen a good run-up actually in today's trading session. Atul Limited is trading almost with gains of 10%. It's a day's high, currently quoting around the mark of 3,029. Himail, on the charts, anything for this one?
Oh, it's been an uptrend for some time now, Navneet. If I look at the charts, it's bottomed out way back in 2009 March, and since then higher tops, higher bottoms, and to go back more, it's in an uptrend since 2001. So all-time highs, nothing much to look at in terms of negativity, but the recent high came in at around 3088 in Jan, and we've come within striking distance of that today, 3089. So and the way it's moved 10%, I think it could take a small breather over here. Yeah, if it closes above this 3088 level, Navneet, we are looking at an minimum 8% upside from here.
Minimum 8% upside from the current levels is what Himane is suggesting on the chart. In the last 12 months, actually, the stock's only up nearly 25%. The move has just come in the last half an hour of trade, so do watch out for Atul Limited. With volumes also seem to be pretty much decent. Anand, are you surprised the way Axis Bank has behaved today? The numbers, obviously, the slippages was something which surprised the street. But do you think now, at these levels, all the negative surrounding the bank is priced in now?
How many times have we heard this every quarter after quarter for the last perhaps 8 to 12 quarters that it is now all in the price and it is all in the numbers. I would wait to see when the numbers actually begin to turn around. There is no point in trying to anticipate it. One has always seen that whenever there is a change of management, somehow new bad loans come out of the woodworks, as it were. So while there is now clarity that the management will change, whether the new one will find new problem areas is something that we don't know yet. That said, from a purely sectoral point of view, I think corporate-facing banks at some stage have to turn around this year if we are going to live by the kind of earnings growth that the market is projecting. And therefore, you have to be looking at opportunities in the corporate-facing banks, where clearly Axis is one of the, one of those which could be targeted. My own personal preference is perhaps to look at things like State Bank, where the balance sheet size is such that it can submerge a lot more of the problems that come through.
Okay. Anand, the Maruti management just about getting ready to speak to media, so take a moment to thank you for joining us today. And let's get across to R.C. Bhargav as he gets ready to speak to media. I started. Let's get across.
Our growth has been 14.5%. We had forecast at the beginning of the year that we will do double-digit growth. So we managed double-digit growth. It's turned out to be 14.5. The total profit figure for the year, how much is it? 7,800. Where's the year figure? 7,722 crores, which is about 5% higher than last year. But one thing you must remember, that compared to last year, the tax rates have gone up. by about 3%. Instead of 26%, now we pay 29% tax. And there have been some unforeseen or exceptional items in this year which were not present last year. For example, this mark-to-market has had an adverse impact, which doesn't really affect because we hold the securities till maturity. But there's a lot of volatility in the quarter-to-quarter results because of the mark-to-market rule which has now come into operation. So that is something which we have to keep into account. We have also had, I think all of you are aware of this Manesar land issue which has been there for a long time. And that was finally got cleaned up, and that has had an impact of something like 255 crores on the balance sheet, on the profit and loss account. So those are one-off items which have come into the picture this year. But if you leave that out, I think overall we have done better in all respects compared to last year. The market share has gone up to 50% from about 48 last year.
Plus 2.6%.
Plus 2.7%. Plus 2.7% market share has gone up. And in terms of cost impact this year, the material commodity costs, I'm not talking of components, I'm talking of just the steel, aluminium, such things which we buy. That cost itself has gone up by 700 crores this year. And I think those are the main items. The royalty for the year has come down from 5.8 to 5.4%. Although in the last quarter, the royalty was hit by the yen becoming much stronger, from 0.57 to a rupee to 0.61 to a rupee. Or the other way, 0.61 yen. So that has had an adverse impact in the last quarter. But overall, it's still 5.4% compared to 5.8% in the earlier period. In the last quarter, the employee cost has shown an increase, but that also requires a little explanation because the variable pay amount which we include each quarter in the results, in the cost, used to be 300 crores. In the last quarter, this went up to 400 crores because it was decided to increase the variable pay amount. And I think these are the two major items, isn't it?
Gratuity provision because of change of...
A small amount difference in the gratuity because of the gratuity provision has been changed from 10 lakhs to 20 lakhs. So that will mean another 30 crores provision for gratuity. So that's as far as the results of the year are concerned. Now the other things which I would just like to mention before you start asking questions, the dividend which we are proposing, subject to shareholders' approval, is 80 rupees per share against last year's 75. This would keep the dividend payout ratio more or less unchanged, slightly higher than last year, but just under 38%. And as you know, our scope of things is that dividend payout ratios should be under 40%. The board has approved in principle that as a part of our 35 years of partnership with Suzuki, we will set up two funds. One will be an employee welfare fund. This employee welfare fund will deal with matters relating to education, health, and infrastructure in housing colonies. Details have yet to be worked out, and the formal approval to the fund has to be obtained after the details. But in principle, the fund will be set up this year, and each year the fund will receive 1% of the net profit of the previous year. So we will transfer to the fund 1% each year. This employee welfare fund, for example, this time will get something like 77 crores for employees' welfare. We are setting up a second fund, which will be run by a trust, which is for promotion of research and scientific work in the country. And this also will receive 1% of net profit each year, net profit of the previous year, each year. And again, the details of this fund have to be worked out as to which institutions will receive, which body of people, scientists and others will decide what projects to take up and such things. So that will be worked out. But we will have this fund to promote scientific research in India, which we will...
1.76% down, 8786 and counting. Just before we get into the next management or the next stock at hand, Manav, a word on Maruti Suzuki, and would you trade it? It's the start of the series. Would you trade it?
See, at the current levels, the stock has been observing a series of decline from its highs of 9,300. Definitely, the prices are nearing its oversold zone. But I sense that the next important support level for this stock is close to 8650, 8600. So I think it still has that room for it to decline on the lower side. And looking at the near-term charts, it definitely looks weak. So for me, getting an entry today does not make sense. I think one should wait for it to come near to its support levels, where there is important support levels, and then in case if the stock reverses is when you take some buy calls at lower levels. So 8600 are the important support levels that I would want to look, at least for the near term perspective.
Okay, that's Maruti Suzuki. That may not be doing well, but the big boy Reliance Industries certainly is doing well. It's expected to post a strong set of numbers for the fourth quarter as well. Refining margins, however, may have narrowed. Let's discuss the expectations with Mr. Sudeep Anand of RDBI Capital. He joins us right now on the show. Sudeep, good having you. Thanks so much for joining in. Some upticks in the run-up to Reliance Industries results as well. Sumit in the morning, since the morning, has been saying that all eyes are out on what Jio does more than anything else. What are you expecting the big boy to deliver today?
Yeah, good afternoon. So we are expecting yet another strong numbers from Reliance in this quarter, where we are expecting about its EBITDA to grow by around 47% to around 180 billion rupees, while its net profit to grow by around 18% year on year to roughly about 95.4 billion rupees. However, on a sequential front, we are not expecting too much of growth, around 2% on EBITDA and 1% on net profit. This is mainly driven by your petrochemicals. So we are expecting a strong performance from petrochemicals. If you see last quarter, both polymers and polyester, but your crack spread have improved significantly. So we are expecting a EBIT margin of roughly about 17.9% for petrochemicals, which will lead to your 79% year-on-year growth in your petrochemical EBIT. However, on the refinery front, we are expecting a slightly dip to its GRM to around $11.3 per barrel against last year's same quarter of $11.5 per barrel. On Jio front, we are expecting a flattish profitability, which will be driven by your higher net subscriber addition and higher data usage, which will be offset by your slightly lower ARPU.
Sudeep, I'm just going to take that Jio contribution forward. Do you expect any sort of surprises to come by when it comes to the contribution this time around from the telecom business in the overall earnings?
So Jio actually since beginning has always given the surprise. So even if any surprise comes, then that will not be a surprise, I'll say. So But the profit, if you remember last quarter, the profitability was around 14 billion, which was EBIT, which was also a surprise. So definitely it's very difficult to gauge the kind of numbers that the company will get. So we are expecting a flattish sequential growth on profitability front.
Okay, point taken. It will be difficult to predict what sort of numbers come out with regard to that telecom vertical. But what's the rating do you guys have, Sudeep, on the stock, and what's the target price?
So we have a buy rating. It's one of our top pick in the sector with a target price of 1100 rupees.
Okay, and the stock's already touched the mark of 1,000 rupees in today's session. Sudeep, I appreciate you joining us today and giving us that heads up, and also taking us what to expect from the biggie Reliance Industries, which is likely to come out with its numbers post market hours. And the stock definitely has been on a good run up throughout the week. In fact, it also crossed the mark of 1,000 rupees in today's trading session. Well, Hemin, any call on Reliance considering it has crossed the 1,000 rupee mark?
I'd expect some profit booking. Frankly speaking, no signals for that, Navneet. We've had a brilliant run up from 880 to 1010 in 4 weeks, all-time highs. I don't know. Maybe I think whatever results could be coming is somewhere built in. So I wouldn't short it. Absolutely not. We spent 28 weeks of consolidation, Navneet. Frankly speaking, we are heading towards 1100. But after this run, I'd be very, very uncomfortable going long from here.
But don't go short either. You know what's happened to some stocks which have come out with good numbers the next day. TCS a case in point. Yes, Bank a case in point. Not next day really, but the very same day. So shorts might get trapped as well. Pertinent advice from him. Okay, before we slip into a break, let's take a look at all the key highlights of the day today.
I do think that I don't live there, but I've heard plenty of stories about how there have been a lot of execution problems and hiccups in the reforms, but you can't deny that they're there and they're happening and they are having a positive impact. And I think they will continue. I think that people vote differently on a state level than they do on a federal level, Delhi being an excellent case in point with the AAP party. So I'm not too worried about next year's election, even if BJP wins slightly less than in 2012. I think they'll continue to push through the reforms, and that's a good thing. And then the last thing is that the earnings are very robust this year. And I think since 2014, the consensus has been continually coming in too high. But what we're seeing in the most recent results is that the consensus is basically the actual results are meeting expectations. So it'd be nice if they were beating them. They're not beating them, but they're coming in line for the first time, as I said, in 4 years. And we are looking at growth in earnings in the high teens this year. So those are factors that I think. One last thing I might throw in is that you still have very strong domestic fund flow. Probably about a third or a half of that is SIP funds, which are sticky. They will continue to put money in the market regardless. So I think there are enough positives actually to outweigh the negatives that we discussed earlier, and therefore I wouldn't want to get too bearish on it.
As far as India is concerned, we've faced a lot of pressures, GST, price control, and a lot of competitive pricing pressure in the Indian market. But I think going forward, I think we can leverage a lot of what is happening globally to steady our business in India and probably get much higher market share. And probably we want to make sure that our value growth is higher than our volume growth, right? In terms of getting better realization for the business.
If we can approach our business in this fashion, then the sky is the limit. We would be building the capacity and the capability in the channels that we have, and the two major channels are banca and agency. We would be ramping up numbers as far as the number of workforce is concerned. We would be skilling them properly. Digital we will be taking on a high. We already have good digital presence, but we would now be making it more, all-encompassing and more comprehensive, and looking the digital journey from the customer's perspective. And then to see that our own workforce, internal workforce, and our channel partners are also equipped properly. And I think that should ensure that the company does things right.
So next year's growth target then?
We have set upon ourselves a target of 30% plus growth for 18-19 as well. We want to maintain the trajectory that has been injected into the company, and to see that we take off and not, slow down.
What we have seen in case of Axis is it will not be isolated simply to Axis. We expect many banks, in fact, to report losses, certainly for the quarter, and who knows, perhaps for the full year as well, on account of both catch-up provisions as well as these new norms from the RBI, which basically means that whatever was there existing with banks under the restructured book, a large part of that, we are going with the assumption of at least 50 to 60% of that book will now slip into NVLs and invite provisions in excess of 40%.
All right, 24 minutes or 25 minutes left for the markets to shut shop. Back with countdown right here on Bloomberg Quint. And the world markets, just pull up that picture as well, just to show you what Europe is up to. Well, a mild bit of green on the screen. So nothing untoward, which is not a bad sign. We've been having a fairly steady week, and we look like we'll shut shop and on a steady note as well. Before we move any further and get in more experts on board, let's get in Yash Upadhyay, who joins in with the Fab 4 stocks of the day, and let's try and figure out what's made it to his list today. Yash, good afternoon.
Good afternoon, Neeraj. So first up, we have Kirloskar Pneumatics. Now, they reported their fourth quarter numbers. Revenues are up about 90%. EBITDA was up 170%. It tripled. EBITDA tripled from 25 crores to 76 crores. Their net profit is up about 170%. Margins too seeing a significant expansion on a year-on-year basis. So the street likes it, and it's given it a big thumbs up. Supreme Industries reported their fourth quarter numbers as well. A good set of numbers, following which CLSA, whilst maintaining the buy rating on the stock, have hiked the target price from 1,482 to 1,557, indicating a further upside in excess of 15% from these current levels as well. Sugar stocks have been under severe selling pressure over the last several trading sessions. We are seeing some bit of a short covering there. Triveni Engineering is up about 10% or so. Something like a Dalmia Bharat and Balrampur Chini are also trading higher as well. And finally, PSU banks are also up today. Syndicate Bank has snapped its longest ever losing streak. The stock had been on a downward spiral for the last 13 trading sessions. Volumes too coming in at the higher end, almost double the 20-day average. Back to you.
Okay, Yash, thanks a lot for bringing those Fab 4 stocks of the day. But from Fab 4, let's move on to the chart of the day then. The Nifty IT has been delivering negative returns in the month of April for the last 7 years. But will it break the jinx this time around? I guess it should, Somit.
Well, the Nifty IT index, if you see, has been the standout performer so far this year. The index has not only been the best sectoral performer among the sectors compiled by NSE, but more interestingly, the IT index is set to break a 7-year-old jinx. Now, the Nifty IT index is all set to give positive returns in the month of April so far, breaking the 7-year-old jinx. Now, from 2011 to 2017, if you see, in the month of April, the IT index has declined in the range of 1 to 16%. And this month, in this year, that is 2018, in month of April, so far it has gained close to 12%, giving its best April month return in the last 8 years. Now, if you see, the index has also seen its best April month return in the last 8 years, with most of the constituents of the index advancing in the month of April. Now, the top gainers include the likes of Mindtree, TCS and Tata Elxsi.
Interesting. Thanks a lot for that, Somit. If we can pull up I can ask my producer to pull up the SCAG chart of the Nifty IT for the last 8 years, and that will show you a depiction of what it does, not just in April. I think it's an interesting point, though an easy point to guess by virtue of what it has done this month. But the SCAG will give us a glimpse of what Nifty IT is done on a month-on-month basis for a number of months. It should come up on your screen moments from now. But Nitasha, shouldn't surprise anybody with the kind of moves that some of these IT stocks have done. It seems to be a sector which has good tailwind to itself.
Absolutely. Till last year, there were a lot of headwinds which the sector was encountering, including a weak deal pipeline, and at the same time, there was no pickup in discretionary spending as well. And US, of course, had come up with all sorts of restrictions, or rather talks of restrictions that they could have on outsourcing. But this year around, the deal pipelines have strengthened. Europe as a geography has strengthened for pretty much all of the IT companies. And if we go by how TCS and Infosys have reported their numbers, or even Persistent Systems for that matter, they've managed to beat their estimates, at least beat our estimates, and we do think that they're going to continue outperforming in the months to come.
So, it's interesting. Persistent and maybe a couple of other names would be the only ones which haven't rallied meaningfully.
Absolutely.
Whereas some of the others, NIT Tech, for example, or Mindtree, etc., have all given returns. Would you bet on the winners, or would you bet on something which hasn't rallied thus far?
So I think within the sector, we are still positive on Persistent Systems. Having said that, yes, Mindtree is one of our top picks as well. But we do think that the time for outperformance from Persistent Systems is just around the corner. It should start performing well. Their FY19 outlook is still quite intact. Yes, they have gone through a few speed bumps in the recent past, but that's no reason to try and change the long-term outlook. And as long as that remains intact, the valuations remain attractive, we would still continue to remain positive on it.
Okay. Just before we move ahead, and I'm sure we want to take a stock of, I don't know if there will be too many stocks in that FNO list, but the SCAG chart that I was talking about, and if the heat map can come up, because that will show you, that's the screen. I think that's what, if you can have it on the wall as well, I think that's the screen that Somit was referring to as well. And just look at that, month of April for the last 7 years since 2011, it's been a negative return, and 2018 turns out to be a good one. So let's wait and watch. Otherwise, we don't have too many conclusive months for IT. Maybe February typically turns out to be a good year, except for 1 or 2 instances. But yeah, April was an interesting one. It's broken a 7-year jinx, has the Nifty IT in the current calendar. Okay, Navneet, anything in the FNO space to watch out for?
Neeraj, it's just day one, so I think I'll just let it pass.
No, I'm not talking about getting into the band or out of the band, but something which has shown some brisk activity today.
Hemain was mentioning there's a lot of open interest build-up that has been seen for Bank Nifty. A very important point will be whether it's all intraday trading addition that we've seen, or there is some unwinding also which takes place towards the end. Because if you could just pull up the Bank Nifty futures, and remember, majority of the contribution on Nifty that you're seeing, besides Reliance Industries, that's the other heavyweight, it's almost 24%. It's not every day that you see so much build up on a single day, and that too on day one when the volumes are usually tepid for Bank Nifty futures. Since we're on the topic of volumes, let's just see what the participation has actually been for the FNO side. That'll be pretty interesting because the volumes are usually lower on day one, and according to me, these are just about average volumes. It's not even below average, 4.5 lakh crore.
Well, yeah, but day one, I thought it would be fairly decent, no?
That's what I'm saying. It's usually average volume from the FNO space is between 5.5 to 6. We still have to wait what it will be towards the
day
end.
One as well?
Day one is usually below average is what we've seen, because the volumes are really low on day
3.5 is the number that I've typically seen on day one.
3.5 to 4, So it's slightly on the higher side.
Let's wait and watch. Cash market volumes cross 30,000 as well. What's done well today, Nitasha, are some of the tire names. Actually, well, not some. MRF is the standout performer, and that's really zoomed. In the morning, we were talking about the strength that companies like Apollo Tyres could show as well. We haven't seen results come out as yet. What do you expect some of these companies to do?
So I think the results should be better than what we saw last year. Last year, there was a downward pressure due to natural rubber prices, which have remained more or less stable for most part of the year this year. So they should report better numbers, especially a strength on the margin side of it. Within the sector, our topic is still Balkrishna Industries. The company has managed to do a good job on the OHT space. They've managed to get through the trials on the mining side as well as on the construction side. So it's just a matter of time before they'll be able to see the orders coming in on that side, which would lead to an improvement in margins. And also the contribution on the OEM side, which is an area the company has been working on, that would aid margins as well.
Okay, that's the view in the tire space, but an alert from our research team, if you could just pull up PC Jewelers, that's fallen almost 24 to 25%. It's in the futures and options space. No, actually, it's down nearly 30%. Don't forget, this counter was down day before yesterday, almost 10 to 15% correction was seen. Yesterday also, it was down between 3 to 4% of that range. It touched its all-time high, or 52-week high, in the month of January. I remember those levels were 600, and from those levels of 600 now, PC Jewelers is quoting at about 163 rupees. It's been a huge wealth deterioration, so to say, story in terms of shareholders of PC Jewelers, Neeraj.
The management has tried and come and given clarification after clarification across multiple platforms. I don't think it's quite helped this one do have any confidence building measures, if you will.
I think the recent trigger was one of the promoter entity gifted their share to the family members. I don't know why that triggered that sort of selling pressure. That's what the clarification came about.
So the clarification was that it gave.
But we don't know why that happened.
Yeah, but I mean, the point, so, this and a few other things, Navneet, I think it's a concoction of a number of events that have happened in PC Jewelers. The investment that one company made, I think, in PC Jewelers as well. So all of those factors lead one to believe, not have confidence in probably companies, as good as a company that PC Jewelers may be. And maybe Natasha has a view here. I'm sure Yatin has spoken to your dealers as well. So let's get all of that into perspective. 27% down currently. 44 million shares, by the way, traded already on PC Jewelers. That's not small volume. It's fairly high volume as well. Yatin, any buzz on PC Jewelers? We're talking about what dealing rooms are recommending, but anything that you've heard on PC Jewelers?
Well, dealers in general have been shorting and trading, on the counter. And if you look at PC Jewelers, it is known to give you wild moves. Once in intraday, it will go down 20%, recover that 20%. So, in terms of volatility, it's quite a volatile stock. And today's move clearly suggests that almost 30% down on intraday basis, and the 5-7% swings that the stock gives randomly is something wherein small retail investors and speculators should be wary of, because these are the typical stocks wherein the cost of trading could be much higher, and the probability of you losing the money is also higher given the volatility in such stocks. So the probable advice is to stay away in all of these stocks having huge volatility, especially in the future and option side.
Yeah, well, before we get to dealers, then Natasha, any thoughts? PC Jewelers?
Not really.
Not really. Yeah, safe to not have thoughts as well. But yeah, look, and while Yatin was speaking, the volumes have moved up from 44 million to 46 million. It's 45.81 million. The pace at which the trading is happening in PC Jewelers is not funny. And look at that bump up in volumes as well. Just be very, very careful if you're trading this one, to be honest.
Heavy selling is what is being indicated on the cash side, because futures for the last 3-4 sessions, Neeraj, there was heavy shorting seen at every level by the traders.
Well, so suffice to say, a stock in focus. Okay, let's try and figure out what dealing rooms are recommending in the session today. I want to ask Manav Chopra to take a guess on PC Jewelers. It will be a punt at best, so we'll avoid that. But Yatin, what are dealing rooms recommending?
Neeraj, Shriram Transport, that is one company which came out with results a few minutes back. Dealers are indicating that the change in accounting policy, and they have moved their NPA recognition from 120 days to 90 days, and probably that has resulted to slightly weak results. But existing for that, dealers expect that the stock should do well. So this is one stock was almost 70-80 rupees down, but has recovered smartly in trade. Also FMCG is one pack that we were talking about. Nestle, HUL, all of these stocks were doing well. ITC is also catching up as domestic funds are set to be buyers here. So dealers expect the positive momentum to continue as far as this FMCG major is concerned. And watch out for Prakash Industries, as HNIs have been lapping up shares from the open market today. Almost 32.5 lakh shares traded there, and dealers expect the momentum on the upside to continue for this company.
Interesting. Okay, thanks a lot for that, Yatin. So 2 or 3 names to watch out for. Shriram Transport Finance. There's a Motilal Oswal note as well, which speaks about maybe, just maybe, adjusted for one-offs, it's a strong performance in the quarter. Do you guys track Shriram Transport, Natasha?
We do, but we do not. We're neutral on it. Not really have a buy recommendation as of now. In fact, in the entire NBFC space, we prefer to stay away from it right now.
Oh, really?
Because we have seen that the bond yields have strengthened, and that would put a downward pressure on the NIMs across the board for all the NBFCs. And at the same time, the kind of traction that we're seeing on the interest income side may not be able to offset that decline. So we would prefer to stay away from them right now.
So not even a Bajaj Finance, not even a Capital
Nothing.
First? Wow. No NBFCs. What about Ujjivan and Equitas? I think Equitas comes out with numbers today.
Equitas we have been positive on for a while, but at the current levels would not suggest a buy, purely because it has already pricing in all the near-term upside, unless and until they surprise in the numbers later on. We think it's already pricing in every kind of an upside. So if there is a correction, one could look to accumulate it.
Interesting, yeah. In Equitas, watch out for the cost-to-income ratio. I think that's been elevated. The management has taken a lot of hits out there in the recent past. If they manage to bring that down or give guidance for that, could be an interesting one. Okay, time now to get in some closing strategies from our experts. Firstly, Manav, to you, what is your top closing strategy?
See, at the current levels, I like two stocks, out of which first is Apollo Tyres. The stock has actually seen a very good breakout today, and it has managed to exceed its, last 4 to 5 trading session high, and it's closing above its crucial levels of 290. Volumes are also suggesting a good build-up in the momentum. I think going forward, the stock can be a good BTST and also a good trading bet for a near-term perspective. On the lower side, 286 can be the stop loss for this for an upside target of 305. The other stock I like is SBI. The stock has seen a very good reversal from its important crucial weekly support levels and has seen a good bounce from its oversold levels. I think SBI could be the leader for the Bank Nifty going forward, at least in next couple of trading session, and a very good risk reward even at the current levels. A stop of 236 is recommended for an upside target of 250.
Okay. I'm told the management of PC Jewellers is with us, so just take a quick perspective there as well. Mr. Balram Garg, he's the MD of the company, joins us on the phone line. Mr. Garg, thank you so much for joining in. You've given part clarifications about the promoter holding a couple of days back. Anything else that's happened in the recent past, either by way of gifts or some other transfers that could have led the market to be so nervous about it?
Nothing is pending. Whatever is there, we have given clarification. Apart from that, nothing is there.
Nothing's happened today, you are saying?
Yeah. Nothing has happened today, yesterday, before yesterday, nothing.
I'm sure you've tried to, in your own sweet way, speak to market participants to try and figure out what is it that is making the market so nervous. I mean, so 50 million shares traded.
We are also figuring, because as far as business is concerned, we are doing very good, and we are on regular basis. This month we have opened 2 stores. Next month we are opening another 2 stores. Regular basis, March we opened 7 stores. So business-wise there is nothing, and we are trying to talk to the investors what is happening, and right now we don't know about who is selling, what is happening, and nothing change in the company. Company is doing very good. So there is no change in the company.
Mr. Garg, it's quite surprising. Your stock price has fallen from 600 rupees, which was seen in the month of January. You're also suggesting you don't know who's selling your shares. If I'm not mistaken, every promoter or a company on daily basis gets a report from the stock exchanges with the list of the names.
We have given the shareholding pattern. You see, every quarter we have to give.
Mr. Garg, I'm not talking about the shareholding pattern. Just because the price has fallen, I'm sure you would be investigating. If I'm not wrong, I think it's a norm. Every promoter, every management gets a daily report from the stock exchange where you can find the buyer and seller.
Not daily report, weekly report we get.
Fair enough, weekly report.
Yeah, weekly report. So when we got the report, because the sudden fall came in last 3 days only. So we are figuring out, and when we got the report, we got to know who is selling. So I can't say right now who is selling, but definitely we are also trying to contact exchanges, and so we are talking to the compliance also what to do, because nothing changes the company.
So everything's fine with the business. Will the numbers be same what one saw in the previous quarter?
Every time we are giving the disclosure when we open the stores, and just see on the regular basis we are opening stores, and there's nothing change in the company. No change, nothing, zero change.
Any kind of debt positions that are open, any pledged shares?
No, nothing. There is no pledge of the shares, and there is no increment of debt. Nothing is there.
Okay, what's the current promoter holding, considering all the gifts that have been given by non-active promoters as well? What was the promoter holding in Jan, and what's the current promoter holding, Mr. Garg?
Actually, as far as you just see the April shareholding which we disclosed, is around 60% for the shareholding.
And it's come down a little bit, right?
It come down, but only around 2%, I think, given the gift by the family Amuto.
Do you think that there is an outside chance that due to some personal fundraising issues or otherwise the promoter shareholding could go down from the current levels?
No. There is no chance to come down.
You are sure that the promoter shareholding will stay northwards of 60% in calendar year 18, if not
whatever
ahead?
shareholding is today, definitely whatever shareholding we have given, that will be continued.
And none of this is pledged?
Have not sold, in past also they have not sold any share, and future they don't have any plan to sell shares.
And none of this is pledged?
Yeah. Nothing is pledged.
Okay. Who's been selling, Mr. Garg? You said that you know the names, you don't want to say, but is this what? An institution holding? Is it a set of traders who are doing this?
I think we have to investigate. Our team is investigating right now, and we have definitely...
I know you can't give me names because you mentioned you don't want to share the names, but surely you have a sense of what's the nature of the entities?
Right now, actually, we are also investigating.
Okay.
And so right now, we are also investigating.
Fair call. Mr. Garg, do fill in the exchanges in with the investigation outcome once you get them, and all the best.
Definitely. Sure. Thank you.
Okay, that's PC Jewelers. The less said about this, the better. The stock is under a bit of a free fall. Just be careful before you trade. This one is all I can say. Okay, let's not dwell too much on this. There's a market beyond PC Jewelers, which is not down, because the Nifty Bank is still up about 1.63% higher. Natasha, if you had to own a bank, by the way, Axis Bank is up 10%. If you had to own a private sector bank, what would you buy?
HDFC Bank, even today.
Even today?
You talk to anybody, Neeraj, it's either HDFC Bank or HDFC Life.
Right. So I think we've been positive on HDFC Bank, and within the mid-cap space, it would be RBL Bank. That's pretty much it.
That's coming out of the numbers
bank.
today, right?
Yes.
What do you expect it to do?
So we think that, yes, the NPA level could inch up a bit, given that this is Q4 and traditionally we have seen a bit of an NPA issue coming in. But besides that, it is a strong bank. It's a young bank even now. It's a strong bank. They have done quite well and they've made a niche for themselves, and that would help to, deliver long-term returns for them. And even in terms of valuations, they look quite attractive at current levels. So it's HDFC Bank and RBL Bank, which would be a definite buy right now.
Okay, I think we haven't taken closing strategies, so need to take them. And Manav, thanks so much for being patient with us today. But a couple of interviews and therefore couldn't do justice. But let's get in our top closing strategy from both Manav Chopra and Hemen. Manav, to you first. Your top closing strategy today.
See, at the current levels, I've already mentioned about Apollo and SBI, but there is another stock which is looking good, is Hindustan Zinc. It has given a good breakout, and on from the sideways action, I think the stock still has a good upside. At the current levels, the momentum indicators have entered into a buy mode, so I think this is a good buy, at least for next couple of trading sessions. The stop loss can be placed at 325 for an upside of 340.45, and from the tire space, I think Apollo Tire looks really good even at the current levels. I sense that one can see a good upside of at least 5 to 6% in a very short term.
Tire stocks are doing well. Similarly, couldn't talk too much in the second half of trade, but one top closing strategy?
BTST on ACC.
BTST on ACC. Okay. Manav, take a moment to thank you. But Apollo Tires and ACC are the two ideas that have come in from our experts. Manav, thanks so much for joining in today. Have a good weekend. Just before we start wrapping up the markets, Natasha, a quick thought on, or maybe we'll take Natasha's idea in detail.